the economy is slowing down, but it is still robust. Is it enough to carry it and the emerging markets along with it?
Well, I think that apart from the headline numbers being slower than where they were 10 years ago, what's more important for us is that the quality of growth has been improving on two fronts. First, the rebalancing towards domestic consumption has been very rapid, and we think that it still can be an even bigger driver of growth over the next 3 to 5 years. And secondly, we are seeing a better sign that the private business sector is spending more to upgrade, to buy technology. We have seen them moving up the value chain. If you look at the export basket, that's also quite telling. So it's more, apart from the headline numbers, how underlying drivers of growth have shifted. And I think that for emerging market, that means, first of all, good news because China is still growing, but secondly, the changing patterns of transmission as China's GDP composition shifts.
Factory orders looked pretty good. Does that mean that we are at least seeing some signs that the trade issues between China and the U.S., China and the rest of the world perhaps are abating a bit?
Well, we would definitely see some of the high-frequency indicators on a broad basis are improving for the past couple of months. I wouldn't read too much into the single monthly March IP numbers because I think that the Statistics Bureau has been highlighting that there are some distortions, first to do with the seasonality of the Chinese New Year holiday, and secondly to do with the fact that the VAT tax cut kicks in on the 1st of April. So there's a little bit of front-loading before that. But nonetheless, if you smooth out these volatilities, the numbers are looking better for the industrial sector in the first quarter compared with the fourth quarter of last year, suggesting that we definitely have troughed, at least in China.
They've taken some massive steps, the Chinese government has, in trying to prop up the economy. Does this mean then that maybe we see fewer or maybe more likelihood, I guess, the best way to put it, for central bank action there to do things more, reserve ratio requirements, interest rate cuts of that sort?
Well, I think policymakers are definitely in a wait-and-see mode at the moment. I do think that, broadly speaking, the policy setup is still quite supportive. So, for example, if you think about the tax cut, they're only kicking on the 1st of April. So they haven't really shown up in terms of impact on the economy yet. We think that they will carry the economy in the second half of the year. In terms of monetary policy, I think that one thing that's encouraging is that deposit growth has been picking up since late last year, especially corporate sector deposit, and that might just be the beginning of a more self-sustained driver of loan growth, and I think reducing the need for immediate and aggressive further policy easing from the PBOC.